Well, hi, it's Zahira here again, and I am today with Brent Bruce from Rancho Capital Home Loans, and he is the best lender that I've come across. So I want him to come on here and give you some ideas to what to do and just answer some questions about when you're in the process of selling your current home and buying another one. So, Brent, introduce yourself.
All right. Thank you so much for having me. Yeah. Thank you, Zahira. I have been in lending for over 20 years, have done all kinds of different things in the lending world, but really work with a lot of the buyers, move up buyers. I do a lot of VA lending, really anything in the residential space. Currently, I am the owner and president of Rancho Capital Home Loans with my business partner in Rancho Camonga. And we're just looking to help all the people that we can help. So I really appreciate you inviting me to be a part of your channel.
So let's talk homeowners. So say a homeowner is thinking about upgrading from their current home. They want to leave this house. It doesn't fit their needs anymore. They need more room, whatever the case is. Now they want to go into a bigger home. When should they check, or what would you recommend be the process of them getting qualified for that new loan if they're going to be using equity from their house? We said, should they list the house first and then look for the lending, or what do you recommend?
Okay. And you want to assume that we're selling that house?
Yes, and using that equity for.
Okay. Okay, great. So yeah, I mean, really it's the first thing, right? Because before you get into really looking too far into the home that you may want to buy, you have to know what the numbers look like. Right. So how much are you going to get out of the house? And that's something they're going to talk to you, Zahira, about, getting a feel for what the net would look like, which is the amount that you would get after paying off the fees and the existing mortgages. So if you're left with, let's say, $100,000, then you want to talk to me and say, look, I have $100,000 to work with that are going to be our net proceeds from the sale of our current home. What is that? Am I going to qualify for if I want to make a purchase? And that's what I do. And you want to know those numbers in advance. So that's really once you start to get the bug or the feeling like you might want to do this, really you need to talk to a mortgage professional about putting those numbers together. So you want to do that early on.
And what are the qualifications? Are they the same as a first-time home buyer, or are there any different things that you guys are going to be looking into when trying to qualify for a second home or for a move-up home?
Yeah. So a first-time buyer, that's a commonly used term, first-time buyer program, right? We hear that all the time. But the reality is there's not a lot of benefit to first-time home buyer programs. They're not really used as much as people think. And if they're going to do anything, what they're going to do is they're going to help with your down payment. That's what they're shooting for, because that's like the difficulty with our first-time buyers is the down payment. Well, on a move-up buyer, usually you're going into this new home with a chunk of money, right? I mean, you've got some money from the equity from the sale of your home, especially in the market that we're in currently. And that's the beauty of the move up, is that you're taking your equity with you. So when it comes to the first time buyer program, that's not really going to be something that you need. And of course, that's not something that you can do because you're no longer a first time buyer. So what the programs are basically the same. You're still going to be looking at conventional. You can still do FHA. You can do FHA financing. Oh. If you're selling your current home with FHA, you can buy another home with FHA. Okay, so if you're keeping your home, we have to talk about the nuances of that. Same thing with VA. A lot of people don't know that a VA home loan is not a one-time program. You can use your VA loan over and over and over. Oh. But there are rules to that. So again, you have to talk to someone that knows about those rules. But it is very common that someone sells their home that they have a VA loan on and buys the next home with a VA loan. Huh. So we've done that many, many times. You can definitely do that. And the qualifications in general are really the same. Okay. So there are only, I'll give you the kind of my pitch to everyone that I talk to about lending. Okay. There are really only 3 things that a bank is looking for when they qualify you for a home loan. Okay. So the 3 things that they're looking for, they ask 3 questions. The first question is, does this person pay their bills? Right. So if I'm going to lend you money, do you have a history of actually paying your bills? That's credit. That's when we're looking at your credit report. We're looking at your not just your FICO score, but your general credit history. that shows us the payments that have been made or missed, or what that history looks like. That's the first question that they try to answer. And of course, they want to hear, yes, they pay their bills, right? The next question that they ask is, does this person have enough money, enough capital to pay for their down payment and their closing costs? Well, with a move up buyer, usually that's not a problem at all because they have their equity that they're moving over. So if you need $100,000 down and maybe $10,000 in closing costs, you need $110,000. Maybe you're getting that or more from the proceeds from your sale. So we have to look at that. The third question that the bank asks is, do these people have enough income to afford this new payment, as well as the items that are on their credit report, so their existing debts? Okay, so that's called debt ratio. You may have heard of debt ratio. So really, we're looking at credit, we're looking at assets, we're looking at debt ratio, income. Okay, perfect. So that's going to be the same whether you're looking at a first-time buyer, a move-up buyer, VA, FHA, conventional, even jumbo. We're really looking at those specific items.
And so in regards to the closing costs, what do the closing costs incur? Like what type of closing costs do they need, and what's the average or a range of how much closing costs are?
Well, there's a couple different things that I would cover there. So closing costs are made up of a few different things, and really there's two separate pieces to closing costs, two distinct pieces to that. One is the impounds. Okay, so when I say impounds, that's your taxes and insurance. So when you buy a house, you have to pay for taxes and you have to pay for insurance on that new house. And you may also have to put money aside for the future taxes and insurance in what's called an impound account. Sometimes people call it an escrow account. So they have to collect a certain amount of money for that. And then you have the true costs. So when you say closing costs, what are the fees that I'm paying to buy this house, right? So that's going to be like your escrow company has a fee, your title company has a fee, your appraiser, if the bank has like underwriting fees or processing fees. So all the fees on your closing costs as well. But in general, when I talk about these are your closing costs, it's all of it combined. Taxes, insurance, title, escrow, appraisal, notary. Like we try to put everything together. And the reason I do that is because most people just want to know two things. What's my payment and how much cash do I need? Yeah. I mean, essentially it comes down to that. So I'll explain what these things are, but I don't want to say, I don't want to mislead someone by saying your closing costs are $5,000, but I'm not mentioning the extra $3,000 I need for taxes and insurance. Right. And again,
and I've come across situations
be careful.
Where others
there's lots of ways. Hey, no lender fees. Okay, well, it doesn't mean there's not fees, right? So there's lots of different things you have to watch out for. So in the closing cost world, in the past, people used to say, and this is probably like maybe the early 90s, 80s before that, and I'm talking about 1980s for those of you that are watching that were born in 2000. So, they would say, well, your closing costs are 2%. Your closing costs are 3% of the purchase price. And then you would do a quick mathematic calculation to tell you that. That doesn't really work anymore because it's not proportionate in that way. So for instance, if you said, hey, I'm buying a $400,000 house, how much do I need for closing costs? All right. Well, in my mind, I'm thinking closing costs, taxes, insurance, all of the things that you need to come out of pocket with. Right. And I would say $10,000. So now you say, well, I'm buying a $600,000 house. And I would say $12,000. Like I would be roundabout because I'd have to do my math, particularly looking up how much are the taxes on that house, which make a really big difference. And the homeowner's insurance makes a big difference. They vary. So it's best for me to kind of get an idea as far as the purchase price. And then I'll think about the area, the certain location that you're buying in. And then I can give you a general idea. Unfortunately, it's not as easy as it used to be by saying, oh, we'll put on 2% for closing costs, right? And keep in mind, another thing that I want to point out, that when we're talking about closing costs, we're not talking about down payment, right? So if I tell somebody, hey, you're buying, I'm going to use really easy numbers. You're buying a $100,000 house, you need to put 3% down. Okay, well, they do the math on that and they say, okay, I need $3,000. Okay, well, but that's the down payment.
Mhm.
Now you have taxes, insurance, closing costs, and all these other
Right.
things. So like in that scenario, I might say, well, $3,000 is your down payment, but you're going to need probably 3,000 more for your closing costs. So you
Mhm.
need $6,000. And then
Right.
that's sticker shock to somebody who wasn't informed that in the beginning.
Right. Right.
Right.
Right.
So when you do your math, when you think about, okay, I'm selling my home, I'm going to get $250,000 in proceeds. Right. Normally people are going to say, well, I don't want to put all of my money into the next house.
Right.
I want to keep 50 grand for furniture, or I want to keep 100 grand to put in a pool, or whatever the case may be.
Mhm.
So they're doing their numbers. What I ask that person as their lender is, how much money do you want to use towards this purchase?
Right.
Right. And the reason I say that is because a lot of people might say, how much do you want to put down? Right. And they go, 20%. Okay, well, 20% of $500,000, you need $100,000 down, for instance. But I didn't mention the extra
Closing costs.
$12,000 in need for closing costs, right?
Right.
And if they say, look, let's do a new scenario and say, let's say somebody tells me I have $100,000 to use towards the purchase of a home. Well, then I'm only going to use $90,000 for the down payment, leaving an extra $10,000. So at the end of the day, when I tell them how much money they need, it's $100,000. Right. So
Yep.
you can see how things move a little bit. There's a little bit more to it than just saying 20% down.
Right. Right.
And
Yeah.
that's where it's good to talk to someone.